The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
Hello, everybody, and welcome to a beautiful day, July 24th, at the headquarters of Technical Trading and Investing. It is TFNN.com with your quietly lovable host here. And who would that be today? It would be me. And who would that be? I was going to actually put a joke in here, but maybe it wouldn't work. But, yeah, what do we have? It is David White with the Power Trading Hour, and we are going to be looking at a market that's finally pulled back a little bit this morning. We are down to 1682, up to about 1685 now on the S&P cash. So a small bounce. But nothing really to write home about just yet. There are some sectors making some fairly decent signals. I did put on a couple of positions this morning, and I think we've got kind of a market getting ready to set up to have some action, at least over the short term. We are seeing a pullback in gold. What is that? About $16 so far. Not huge, but I think we could see this thing come back to somewhere in the 1275 range on just a normal pullback. And I would have liked, in fact, what I would really like is one more pullback to that $1,200 level. And just have everybody yell and scream and hate gold and wash even the most bearish of bulls. Could you be a bearish bull? Anyway, just the most bullish of bears back down there at 1,200. If it went back down, they probably would just throw up, and I think it could be the capitulation of all time. No guarantee. There's not enough data to suggest that actually happens. That's kind of in my fantasy, is a real blowout that would just get everybody so mad at gold that they wouldn't want to ever hear about it anymore. And my thought is there was just too many people saying it was time to jump in back at 1,200. A lot of pundits on financial information TV or financial information TV. Just too many people out there saying it was time to buy. Made me think that it could be just a short covering squeeze. I would love to see this thing roll over and get everybody just so disgusted with it they want to hear nothing about it again. Of course, today we've got the dollar index up a little bit, up 42 cents at 82.46 for the current contract. We're seeing a little bit of movement off 18 cents on silver, off 360 on platinum, down a little bit on copper, which is probably going to be interesting. This thing, copper, really hasn't made any kind of signal that suggests a bottom is in, other than we have a bounce, and what I've been keying on for a little bit. Anyway, so I'm kind of thinking 1275 on gold will be probably a nice pullback range, and at that point we can start looking at where we'd like to get in, if it is 1275, or if we head lower and get maybe the buy of a generation back here at these lower levels. We're kind of looking at some of the other stuff going on in the market. And, I've always kind of brought up in the summertime that this is a good time to be watching natural gas. It will settle out somewhere around here. UNG trading out at $19.62 as we speak. But to me, there's a lot of things setting up with natural gas, and I think we're probably going to see some announcements in August. So I'm watching it very closely. I'd love to get a pullback into the $18 range on very light volume, hopefully setting up a little bounce, maybe started by a Hot August. Well, that was a great album, wasn't it? What is it? Hot August Sunday, Hot August, Neil Diamond. Maybe it was just hot August. I'll have to check during the break. But anyway, I digress, as always. But we've got, I would love to see this thing pull back and really start moving up on starting to use natural gas to provide electricity. What do we have? Someone's beeping at me here. I'm going to figure it out. Hot August night. I thought it was something like that. I always remember that. It was, in fact, it still sounds fresh even today. Anyway, we're looking at some other things, but the markets did roll off their top. We are seeing, a little bit of pullback. I think we've had kind of the war and peace of speeches going on for about an hour by the president already. This is certainly not a short one. And I think we're probably going to have some more action once he gets done speaking. And that will be, at this point, they were trying to, I think, some of the pullback was waiting to get through any action that he may take or push. So probably, I imagine, before the show's over here today, we'll get a little bit better reaction to that. Today in 1911, American archaeologist Hiram Bingham said his first look at Machu Picchu, an ancient Incan settlement in Peru that is now one of the world's top tourist destination. Actually built, I think, in the late 1400s, only existed for about 100 years. Then the Incas came and gave everybody, coughed at them and gave everybody influenza, and I think everybody died, if I remember the story correct. And not much of a tourist destination. Everybody thinks it has magical qualities. It's always interesting to me. It is very high. I think it's 12,000 feet or 13,000 or 14,000 feet or something. And I think the magical qualities are all people about ready to pass out. But in the 90s, Art Bell of AM Coast to Coast fame always had a lot of people on there with magical theories of this place. And I think I kind of give him credit for making it a huge destination. But, of course, not a lot of things to see in South America. So it is one of the few things out there, and kind of interesting. And of course, if you're half loopy because you've got no oxygen, probably enhances the experience. Probably not going to see David Carradine or something up there anytime soon, but be interesting. What else do we have? Going to be we had Cat out, of course, with earnings this morning, and we're still seeing what just about everybody knows, and that is the rest of the world is pulling back and headed for recession. And Cat's forecast and numbers pretty much say that at least on the industrial side, these numbers will be pulling back. Of course, famed short seller last week brought this up at the Delivering Alpha Conference as one of his number one shorts, and looks like it's starting to pay off with Jim Chanos. But he's been pretty much spot on for the last 10 to 15 years about picking, at least on the long term, maybe not on the short term, good short candidates. But, of course, he's going to hold these things a year and a half or 2 years. And it doesn't matter if they bounce up or down as long as the theme of his trade remains. These guys can remain short for a long time until they get the pullback that they want. And then they'll slowly cover and try to get out at the best price possible. But Cat's words this morning pretty much indicative of what we know already, and that is that China has a lot of issues, to say the least, out here. I'll get you a quote on Cat right now. Yeah, it's down $2.27. So we will... I'll be looking at that. But it's 2.6%, so put on a little bit of drag on the Dow. It did have a rally attempt up to about $85 earlier intraday, but is back down at these lower levels and was down to $82.64. So we'll have to see how this close. Volume is good at over 6.2 million shares are already. So what else do we have out here? Actually, on Carry On, it's kind of got wiped out by the president's speech, but Motorola had been pushing and Google pushing some of their new phones and new tablets. You can already go ahead and order the next version Nexus 7 tablet for, I think it's $225, $235. The Nexus platforms for Google are the reference platforms. So basically they say this is the operating system and here's our reference platform. You can 100% rip this off if you want, but this is exactly how everything should work. And we're going to sell some of them ourselves. Samsung, you can have at it and try to make a better screen. You can do better things, but we're going to have a reference platform. When you look at that compared to Apple's earnings last night, you find out that Apple's iPhone numbers are a little better, but their tablet numbers were showed significantly lower growth potential. And I suspect that when you look at what is available in the tablet market, if you buy a iPad mini for $350 or whatever, is it comparatively better than a Nexus 7 or a Kindle Fire for what, $187 or $190 on sale in that 7-inch platform? And it's hard to justify that extra $100. At least it is to me, especially with the level of free software that you can find on the Android platform. So I'm an Android fan. I actually just finished my first Android program a few weeks ago. If anybody has a great idea, you can always email me at path@tfnn.com. But I'm kind of looking at doing a second app out there. We did one for the just watching the clock to know when the commercials were coming back and leaving. I always called it the tiger clock every once in a while. But we kind of look at that as a, just a proof of concept. I wanted to make sure how everything worked and how you installed programs like that on the platform. But I'm thinking maybe there'd be a great app out here for traders out there. But I haven't found one really just yet. Anyway, we are going to be going to break here just a second because I am looking at my little tiger clock here on my Android tablet. But you can always give me a call at 877-927-6648. That is 877-927-6648. We'll discuss your particular stock. But when we get back, we'll talk about some of these that are moving out here today. And next we'll bring up MSI, which is the old Motorola radio division. We'll be back in a second.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, we had a question that in about where GDX would be a buy. And, I'm hoping for a pullback back to the lows. We've got basically in the GDX, the last major high out here really was September 21st was 55.25, and we're in the range of a 50% haircut on that. And when you get that kind of destruction, normally commodities are a little different, but normally it takes a little while to turn around a big ship. Now, gold is not as big as a lot of things out here, but I still suspect we have a good opportunity to come back. The question is, where would we look in the GDX to buy yet again? We had a lot of volume off the bottom on the 28th of June, and the question is, 24th of June, is that going to be somewhere around 24.75 where support comes in? And I think you could probably say 24.75 to 25.25 is going to be on a retrace where this thing would most likely find the first level of support. And again, I could see it kind of maybe even pierce it one more time and find bulls coming back in to buy it that missed it the first time. I'm not expecting it to blow out the lows or anything. I would love it to go back out and test it one more time on very light volume, especially something in the range of August out here where everything is fairly light. We have a few things out here that could make gold pull back a little bit. One of them is, of course, a strong dollar. 82.40 today on the dollar index, and anytime we see just a little bit of that, we start seeing a lot of movement, not only in the markets, but of course in commodities also, and just that you see a decent pullback here and decent volume. I'd still love to see this 22.21 low tested that has not been tested to this point so far, and you're probably going to see some fairly decent action, at least a volatility in these gold miners for a while, along with gold. But I would probably be more willing to buy gold. I think it's going to take a little while for the consolidation for these gold miners to be over. We've had what Wyckoff called the first automatic rally. That is a rally without real preparation. The other thing I dislike is that, like in the GDX here, is that the first low at June 26 came with 46 million shares. We got back in it, and you did not test the low on June 5th with 43 million shares, and that actually 43.6 million shares really makes me think that that could get, or at least at that level, could get tested one more time, which has made me a little bit nervous on the miners themselves. I think gold probably has a better bet of holding that 1275 than GDX has of having these. I think a lot of people are just glad and trying to get out of some of these as it would normally consolidate, and you might see consolidation be out here a lot longer than people think. So I know some are a lot more bullish on gold than I am. I'm just thinking that maybe they are right, but time frame a little longer than what they think. So that's just I'm just thinking that, just with the destruction out here, you normally don't see a V bottom and it's just all over. And I think a lot of times you get at least an attempt back into the lows, if not an actual piercing of the low. So I'll continue to look at those kind. Anyway, we're talking about some of the other stocks out here moving today, and we're talking a little bit about Apple, and we're going to look at it. It did go to 444, which is kind of a top of its range. And what is it? Yeah, 443 now. Decent volume out here, but certainly nothing like we've seen in this price range. If you go back to the 16th and 15th of May, we saw 26 and 21 million shares. We're up about into that range right now with about 16 million shares. So not huge. I think that this thing also is probably in some longer or larger consolidation. We talked a little bit about it. Their tablet sales, not so good. Their iPhone sales, a little bit better. It kind of popped mostly on the speculation that they will have a new product out, not just a new iPhone or a new tablet for the fall. But that is speculation at this point. There's no hard evidence. We will be back in just a minute. Give me a call, 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And today we've got, we were talking about Google. They've got a little shindig going out there. They are showing their new tablet today, which is the Nexus 7. And, to tell you the truth, right now, especially versus the iPad mini, kind of interesting. The 16 gigabyte version will be available for $229. Probably the most interesting thing is it has a huge high density display, which is 323 pixels per inch, and that's well above the Retina display that Apple pushes. So not a bad deal. The 32 gigabyte model will sell for $269. So when we look at these, solidly $100 cheaper than the iPad mini, very, very, nice. Especially you look at the Kindle down there. This is going to be a tough market, I think, for Apple to continue to compete in. Again, the profit margin on a tablet is about 1/3 of what they make on the iPhone. So to really make up any kind of cannibalistic sales of iPhones by, every time someone buys an Android phone, pretty big hit to Apple and their top end growth. So what we're seeing out here is a lot of discussions about Apple coming out with some new product. The idea is that the projections that Apple has for sales only make sense if you do you just basically put a new product in the sales forecast for late September or October. A lot's been talked about the wristwatch. Of course, Google's talking numbers finally for Google Glasses. They figure that they will sell 2 million Google Glasses somewhere like $5.99 in the first year at $5.99. Kind of interesting. People have already hacked Google Glasses, and there's a separate operating system already. And some people are a little upset about that because Google Glasses has the third-party operating system that you can flash into the device. Already has a system for facial recognition, and a lot of Big Brother overtones with the whole Google Glasses of someone always being around, always videotaping everybody. I can see where that could go. Right now we are at 16:48:25. The president has quit speaking out here. Not a big impact. I thought maybe we'd see a little bit more of a move. This looks like a continuation of that move. 2.5 billion shares on the trading day. Anyway, we looked at Google. Google made a good and valid low-volume test of a high. It did bounce back a little bit. I think the biggest issues that you have technically are these gaps that exist in Google. Let me turn those back on. That you can see there's a little one down at about 530 to 537. And not a lot of volume on that, so probably not a huge target, decent volume. That would be probably a minimum pullback into that 630, 635 level. You had a nice, real, clear test of the top out here. So the question is whether or not this big gap with huge volume that happened on the 23rd of January this year gets filled, and that goes all the way from 700 to 735, it would not be uncommon to at least come back to that 735 level. You had your first test down here, or last major test at 761. So you could even see that even into that range would be probably a likely target. Let me put it that way. After the bell tonight, and again, it seems like this market wants to hurry up and wait for the next tune, is Facebook. Of course, Google came out and said that their ad revenue for mobile ads was headed down. They have it's basically supply and demand, and there is an open market on selling those mobile ads. That price has come down. Facebook, of course, trying to monetize itself. They're saying that they're all over mobile. This always kind of reminded me of the first days of the gold boom back in 2000, 2001. I think if anybody has some of those, they're probably going to see stocks that were listed as gold stocks that literally just changed their name and put gold in them as complete scams, thinking people would buy them thinking that they were gold companies. Facebook is kind of on that, we're on the mobile. We're all on that mobile train too. But of course, the question is, a lot of the forecasts of the price and growth of Facebook is based on what they have out here in mobile, the ability to go from the desktop to mobile, and it just hasn't been proved yet. Now, what do you have in Facebook? You have a beautiful ABC setup on a failure, and the expansions on that are very clear. If you look at the 2907 high, which was on May 3rd, is your A point. Your B point comes in at 22.67, and your C point comes in at 26.78 from the July 17th high. You've had 4 dojis in a row. Talk about scary, waiting for earnings after the bell tonight. You really have to kind of think, ooh, this is exciting. Anyway, a 1-to-1 would take you to $20.38. Let me zoom in just a little bit for you guys at home. 1 to 1.382 would take you to 17.94. But when you look back a little bit, where's likely support to start coming back in? You've got some fairly decent numbers back here at 23.37. And that is 78 million shares. Is that right? Yeah, 78 million shares. So you're going to have a big congestion zone. But I think you could probably see on a major failure tonight on earnings, you would probably think this thing would probably come down to the $20.38 level. And that would probably be pretty good. That'd be about the midpoint of that consolidation congestion zone that started at the September 4th low. Now, again, this does have a low out here, that September 4th low of last year, 1755, that has not been tested. So that's always hanging out there. Of course, you do have some extreme ABC down that would take you to 1718, which is well in the range of this thing being tested for the low. And, of course, the volume characteristics are very good. This thing, the wheels could fall off. Now, the problem is that you've got a company that's worth probably about $8 on paper. And, of course, everybody, like all things, are saying, well, they've got 1 billion users, da-da-da-da-da-da. The problem is if you had those 1 billion users, you'd have the money already. You got, $40 billion to build your company with. You've got all the money in the world. Where's the beef? And we have yet to see it, which always makes me nervous. And we'll talk about that a little bit. But it is probably at the Rubicon. If you had decent earnings on this thing, you're probably going to find that 29.07 probably the upside. Now, the big problem with this, and the reason I'll be standing back, is it continues to have a fairly high short interest rate. So if you're on the wrong side of this thing, I think you probably see after the bell 29. Probably $30 instantly on the downside on a big miss. Yeah, I think you might see that below $22. I think this could be a very volatile stock after the bell tonight. Again, you can give me a call at 877-927-6648. That's 877-927-6648. Actually, a beautiful day down here in Florida. If you want to talk about a beautiful summer day after being kind of scorching hot over the last couple of weeks, and hot and rainy every day, and millions of degrees of humidity, very, very nice day. 1484.85, so we're down 7.5 points on the S&P cash. And again, that volume just very, very slow right now, 2.55 billion shares. So not a lot of conviction in the pullback so far. Apple is up around the high of the days at 444.36. I suspect that there were enough shorts in this that it may stay up here a few days. But the question I'm looking at in Apple is whether or not it does an IBM, and I think we'll probably start seeing that over the next couple of days. Of course, we've had some big failures out here. McDonald's, probably the one that is the kind of du jour one that is makes everybody a little questionable out here is Boeing. Of course, I always liked the pilots that said it's Boeing or I'm not going. But chart appearance, cursor, none. Let's get back to that. But this thing did bounce up on earnings this morning. Volume really did not come in. This thing has been moving pretty much on short interest forever. I remember this thing down about $83, and everybody wanted to short the thing, thinking that their airliners would be falling out of the sky. And I just couldn't see until orders started to be canceled, thinking that you'd want to be on the short side of Boeing out here, especially in a recession. If you've got 5 years of business that you could get to in 10 years, if the economy is good, if there's one company you probably want to own, it would be Boeing. And everybody took the opportunity to buy this thing all the way up. It got to a high of 109.49 today, but the volume, again, pretty light. And I think we've got this huge day where the transponder, emergency transponder locator beacon that was made by Honeywell started a fire. I think it was in England, and you had that huge bearish engulfing day on monstrous volume. I think you probably still have some echoes of that. I think if you were looking at this one, you're probably going to have to go back to 102 before you get your next chance at this one, and probably get a good opportunity to do that if volume remains low. But of the blue chips out here, there's only one company that I know of that no matter what the economy does, they're going to have business for the next 5 years, and it is Boeing. The Airbus competitor to it will always use about 10% more fuel, and if you even put together the General Electric engines with it, you're basically talking about a vehicle that can use less than 20% of the fuel than the Airbus competitor if it's using the Rolls-Royce engines, and it is just very hard to imagine anybody buying the Airbus over the Boeing if they could get the chance. Now, a lot of airlines are forced to buy them, especially in Europe, and tit-for-tat deals with the Chinese. So, Airbus is not going out of business, but certainly Airbus is one of those companies that is owned really by so many different countries that it doesn't have to make a real profit. More than anything, it's a make-work jobs bill for most of Europe, and of course made from England all the way to the Danube in Germany. Seeing basically a fairly bearish signal out here. You had a lot of volume. It couldn't hold the highs. And, when we go back and look at a lot of these stocks, I go back to IBM. You want to see, stocks have a sign of strength and then stay up. And what we have, especially in IBM, looks to me rather scary, and that is after the pop with decent volume, heavy volume down, you could almost call them doji days back up, filling back up that candle, but the volume incredibly light in International Business Machine. I suspect a lot of people are looking at IBM the same way I do, which is they fired a lot of people just under the bell last month to get their earnings per share correct, and I think there's only so long that you can continue firing people and get it a little bit better. Anyway, what else do we have going on in the marketplace? We got volatility picking up just a little bit. Kind of interesting that this isn't a major pullback. We got into 1 or 2 points of the 1700 high on the S&P cash, and I suspect we're going to, if we are going higher, going to have to consolidate a while at these levels to really go bust out the top. The earnings tonight, I can't really see Facebook being a deciding factor on pushing this thing over 1,700 on the S&P cash, but we will look. Anyway, we're already pretty much over there. You can give me a call at 877-927-6648. That's 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pazavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Young child with a dream every dream when children play. Seems like you end up alone. Papa said he'd love to be with you if he had the time.
Oh, boy. It's a hot August night. What a great album. Anyway, we're going to go to Roger in Mount Vernon. How you doing today, Roger?
Pretty good, I guess, Dave. How about you?
Fantastic. It's just a little bit cool in the air is all I need, and we got it today. I'm actually starting to go through these 5-day deodorant pads every 5 minutes down here. I'm just glad that I can make it to the car without ruining my shirt.
I know. I lived in Atlanta for a while. I know what you're saying, yeah.
So, anyway, want to look at Netflix? What's your question on that?
Well, I'm in a long position, and I'm wondering if that's a bad place to be right now. It looks like it is, but
Well, I mean, for the short term, it is. The only, I mean, I think you're going to see this thing continue and could gap one more time higher. Maybe it's some kind of nebulous deal. But as long as King Carl Icon is not selling, it's going to be very hard for this thing to go down. My guess is that he is going to want to sell this thing and start ringing the register. He's got a lot of money. He's in this thing at about $55-57 on the average. And, to me, he's got probably one of the biggest winning percentage games of all time. Here's where it's nice to have either a friend or a host that owns a Bloomberg terminal to keep an eye on this, and we can thank Tom O'Brien for paying the $2,000 or whatever it is a month to get that kind of data. We'll probably keep an eye on it, but I haven't seen any thing roll across the tape yet, that suggests he's really starting to move it. Now, have you ever read Reminiscence of a Stock Operator?
No, I haven't, and that was one of my concerns with him holding this thing. I'm wondering when he is going to just, take his profits. And
you're going to see volume in it. I mean, you got a little bit of volume yesterday in it, but I think you're probably going to see. What price point are you in on this?
I'm in about, 252, something like that.
Okay. So, I just can't see that this thing's probably going to gap in the next week. So you're off, $4 or something on it?
Something like that, yeah.
Yeah, I mean, that's a pretty small loss. I just don't see, if I was going to be playing this, especially after earnings, I'd probably be owning an option on it instead of owning the actual underlying. Have you looked at the options that are at all?
No, I haven't. I'm just not comfortable with doing options for some reason. Okay. I just got too much other stuff going on. So.
That's fine. The one thing I'd like to on options is at least you're going to limit your downside risk if he starts blowing this thing out. But the reason I brought up Reminiscence of a Stock Operator is at least the biggest operator of all time said that it was impossible to sell a stock on the way up because, if you had a big position in it, it would just, the supply that you could offer would instantly crush the stock. So the idea is to wait till the thing's pretty much done going up, let it pull back, and everybody thinks, it's a deal, and then you start distributing. So my guess is I still think you have a good chance of one more gap higher. Being along here, I just think the risk reward is probably not as great or good enough. I think there's probably better things to be out there in. I might just take my... Anyway, I want to thank you for the call, Roger, and see you tomorrow.
Okay, thanks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.